So you've been in business for a few years now, but you struggle to turn a profit year after year. After you take out all your expenses, you're literally left with the what left, if anything at all. But here's a radical idea. What if you take your profit first, even before your expenses? Does it sound crazy? Well, hey, I'm Kalila Reynolds, and it's time for Money Moves JA, brought to you in partnership with Exim Bank's Business Advisory Service, giving you the tools to grow your business. I'm going to be joined by author of the book Profit First, Mike Michalowicz, so stay tuned. We also have a giveaway coming up. Hi, Mike. It's great to have you on.
Hi, Kalila. Thank you so much for having me.
And you said my name perfectly. I love that. All right. So I've been reading a couple of your books. One of them is Profit First, and explain what the concept is. It sounds simple enough, but it's really a radical idea in business.
That's correct. So the concept is you pay yourself first, but applied to business. Many of us have heard of this in our personal life. When you make money, take a portion of that first for your future. Pay yourself first principle. But sadly, businesses don't do this. And what I found is most businesses, money comes in, all that money goes out, and we live hand to mouth for the entirety of our business. The profit first is a flip of the formula. The traditional formula being sales minus expenses equals profit, meaning profit comes last. Now, in the profit first formula, we do sales minus profit equals expenses. How this works is every time you do sales in your company, you immediately take a predetermined percentage of that as profit, hide it away from your business, and the remainder is what you have to run your business off of. As you said, it's a simple system. It doesn't mean it's easy. You got to stick with it. Your business will speak to you because as you take your profit first, you will discover what's truly available to spend to run and grow your business.
Yeah, a lot of people are going to say, but Mike, that's selfish. How do you take your profit first when your objective is or one of your objectives is to grow your business? Shouldn't I be reinvesting my profits into my business, especially if it's a young business?
Yeah, and we've all heard that. It takes money to make money. You got to plow it back and reinvest it. Well, I'm happy to report we have over 350,000 businesses that have implemented Profit First. And the surprising but truthful feedback is this. Businesses that take their profit first actually grow faster and stronger than their contemporaries. Of course, the question is, well, how can that be? Well, if you take your profit first and there's less money left to operate your business, you have to be more selective in how you spend the money. So the entrepreneurs become more focused. We don't just randomly say, I should run these ads, I should do this marketing, I should do this because the competition does. Instead, we say, what can I do that actually drives results? So we become selective and much more focused. We also often focus on a specific customer base. We say, who's buying from us, who really likes us, and we start to cater to that community. So you become specialized in the community, you specialize and you focus your efforts, and the business grows faster, all by taking your profit first.
So tell me something. Do you get resistance when you came up with this idea? Have you gotten a lot of resistance from people who are saying, but Mike, whatever the reason is, this is just unheard of, especially from accountants, because this is not how they're accustomed to doing things. And if you get the resistance, how do you bring them on board, your business partners, your accountants, etc.?
Sure. So when I first came out with the concept, the resistance was everywhere. It actually started with me. I didn't believe this would work. I just did it because I was desperate. I'd grown a business that was very successful in regards to revenue, but it was devastating to me. I couldn't afford to run it anymore. I had to refinance my house to cover payroll. It was horrible. So I created the system really out of desperation for myself. I was the first disbeliever. When it started to work for me, that's when I realized, oh, this works with our behavior. It's human nature when we have something to consume it. Like, I like chocolate chip cookies. I love them. And if you put one chocolate chip cookie in front of me, I'll eat one. If you put 15 in front of me, I'll eat more than one. So as the supply increases, I consume more. Well, as money increases, we consume more. But I hear from accountants who are professionally trained who says, we've always said profit comes last. It's the bottom line after all.
Right.
Right? They say, this is not what's taught in the thousands of books. And that's 100% correct. It's not taught in any of the books. But the problem is, there was a study, it emanated out of the US, became a global study. It was run by a US bank. They identified that 83% of small businesses, and there's 300 million of us globally, 83% are surviving check by check. 83% are not profitable. And this is the irony. We start a business to be profitable. That's why I'm in business. I suspect you're in business too, to bring about a degree of financial freedom. And yet, that's the primary reason, or one of the primary reasons we start a business, we don't achieve it. What's the common problem? Well, the common problem is we treat profit as an afterthought. It comes last. So even though thousands of books say profit comes last, it isn't working for 83% of us. We need a new formula. So that's why I tell people, when they say this won't work, I say, well, show me the current system you follow and how well is it working? And the vast majority of businesses aren't profitable. That to me is the proof that what we have doesn't work. We need to try something new.
And you've actually done this with multiple businesses, Mike. For those who aren't familiar with your background, tell me a little bit about yourself as an entrepreneur.
Yeah, so I started in the tech space right after university. I went into the tech space, studying computer systems and so forth. I did computer crime investigation. Actually, my company investigated part of the Enron trial, which was a global, case study. And then I went on selling that. I've run now membership organizations. I had a manufacturing business. I love the entrepreneurial journey. I really love it. And once I discovered profit first for myself, the early businesses, while they were growing in revenue, were not profitable. That was very stressful. Once I discovered profit first, I mandate it for every business I do. Everything I start, we have to run the profit first system. Because a business, I believe it's actually selfish not to be profitable. I think so many businesses are so on the verge of struggle, living check by check, that they can't serve their clients well and effectively. But when we have profitability and the business is sustainable, it removes that stress and we can concentrate on serving our clients well, serving our community well.
Reading your book there are so many parallels between what we tell people in personal finance. So we tell people, pay yourself first and then pay your expenses after. So when you get paid a salary, you take a percentage of that and put that towards savings and investment. And it's the same principle that you're applying for businesses. I like the concept of how you break it down and the how. And so let's get into a bit of the how do you implement profit first, because you have some ways that make it easy.
Yeah, we need to intercept what's called the behavioral path. Speaking with entrepreneurs throughout the country. And I asked a question, I'll never forget. I said, just by a show of hands, who here does what I call bank balance accounting? And what I mean is, as opposed to looking at all the accounting statements and interpreting it and figuring out your numbers, who here logs into their bank account on their phone or their computer to see how much money they have? And based upon the money you see there, you make decisions. Either you can spend money or you can't. Mm-hmm. And all the hands go up. Kind of sheepishly in the beginning, but all the hands go up. And what I want to acknowledge is that's the norm for all entrepreneurs all throughout the globe. That most of us revert to bank balance accounting. We see the cash we have on hand and make decisions around it. Well, we need to intercept that behavioral path, meaning Profit First must be set up at your bank. That's why I'm so happy you're with Exim. Exim's awesome because it's a bank that understands this. That when we have multiple accounts at a bank with the labels associated with the intended use of the money, will work often within the parameters of it. For example, most business owners, when they log into their bank, they have one account and it just says checking and all the deposits go in there to spend money from it. Problem is when a lot of money comes in, they see all that money and say, I guess I can spend it all, and they spend it on the next need. But what we're going to do is have multiple accounts. And what happens here is now one account is for example, profit, to reserve for the future of the business. Another one is called owner's compensation. It pays for the salary of the owner, which is different than profit. Profit's for the reward for having the courage to start a business. Owner's comp is for working in your business. Taxes. I've yet to visit any country that doesn't tax business owners. Jamaica, U.S., no different.
Tell me when you find one.
I'm still looking. If you find it, tell me because I am moving there. But they stick their long arm and they pull money out. So we have to reserve money for that inevitability. There's an account for the operations of the business. So it's multiple accounts. Now, when money comes in, we divide it up based upon percentages to different accounts. For example, if $1,000 comes in, we used to say, I have $1,000. But now you say, well, $100 goes to profit. $300 goes to owner's compensation. Another $200 goes to taxes. and that leaves the difference. I think it's $400 into the operating expense account. And now you don't have $1,000 to operate your business, you have $400 to operate your business. And you have to operate within those parameters because you want to achieve that profit. You want to pay yourself a reasonable salary. You don't want to worry about the government when they come and knock and pull the money out of your business. So now by logging into your bank account, you know what the pre-intended use of that money is before you spend a penny.
So how is this different from looking on a piece of paper that your accountant gives you and basically knowing where you are? Why do you need to go through the trouble of having all these multiple accounts?
Yeah, it's different because we don't look at that piece of paper. It is human nature to take shortcuts. I'll give you an example of my own personal life. I wanted to exercise regularly. And for years, I would think about it. I would kind of do it, but kind of not. About 5-6 years ago, I committed to it once and for all because I found the hack. I looked at what my natural behavioral pattern was. And when I wake up in the morning, I go to the bathroom, I go get a cup of coffee, and I start thinking about, I got to work out, but I'd rather read the newspaper and watch the news and then head off to work and not work out. I asked myself, what's the first thing I do every single time? Well, when I wake up, I go to the bathroom. So I put my gym sneakers on top of my toilet seat. The only way I can use the bathroom is by grabbing my sneakers. And now my sneakers are forced to be in my hand. I put them on my feet, and I go to the gym, and now it's become a routine. Well, in our business, the accountants can provide us with all the paperwork in the world. It doesn't mean we're going to look at it. The question we have to ask ourselves is, what do we always do when it comes to money? And for most entrepreneurs, we log into our bank account. So if that's the first thing you do, if you log into your bank account as a shortcut, that's where we have to put the system, because then it intercepts. It's like putting the sneakers on top of the toilet seat. It intercepts your path, and you have to see it. You have to face it. You can't avoid it.
Mm-hmm. I'll admit, I do that multiple times a day. I'm one of those who would be raising my hand sheepishly, looking to see.
There's a word. If you do that multiple times, there's a word. It's called "you're a human being."
Human
Welcome
being.
to humanity. You do it. I do it. Almost every entrepreneur does it. The sad thing is, I think traditional accounting says that's a mistake. Don't do it. There's shame associated with that. I think it's the best thing you can do. I'm happy to hear that you do that, because this system now will intercept that. It will serve you. You can continue that habit, now start channeling money to a profit.
And funny enough, I use the bank balance system in my personal finances. So I have an account that's a spending account. I have an account that's for savings and investment. I have accounts for various things, for money that I don't want to touch and money that's for spending. So it's not a stretch to do it for business. But for some reason, when you put it down in a book form and tell people, do this for your business, it becomes, oh my God, revolutionary,
right.
Or
overwhelming.
Right.
Exactly. Yeah. So it's a little frightening. So I give people a secret to get started, because similar to working out, if you decide I'm going to start exercising and you go to the gym and you see all that equipment there and there's people running like mad or spinning around on their bikes, it's overwhelming and it's safer to avoid it. But the best thing to do is simply to take a small step. Don't go to the gym to work out. Go to the gym just to arrive at the gym and maybe stretch a little bit and head home and get the routine of stretching. Then over time, you start working the muscles. Well, in our business, the small stretch step is real simple. I encourage everyone that's watching this, go set one bank account, and that's it, one additional account. Call this account profit. Then, starting today, allocate 1% of your income to the profit account. So now if you have $1,000 comes in, take 1%, which is $10. Like, that's nothing. Because if you can run your business off $1,000, you can run your business off $990. That's inconsequential. But what's significant now is now you have a little bit of money piling up at Exim. And as this money starts to grow, it starts building confidence. Now you're stretching. What if I do 2% or 3 or 5 or 10? And now you start building the muscle, and then we'll roll out the whole system. I was saying, start slow and let it grow. That's the way to be successful at Profit First.
All right. Thanks, Mike.
Here's a recap of Mike's Profit First principles. Try the Profit First formula. Sales minus profit equal expenses. Set up multiple bank accounts for your business's various types of expenses. Example, profit, owner's compensation, operational expenses, and taxes. Start by allocating 1% of your income to your profit account.
And it's time now for our giveaway question. Give me one of the key principles of Profit First. Comment your answer on Exim Bank's Instagram page at EximBankJA, and you can win yourself a lovely prize. Also, check out their website, eximbankja.com. That's it for this episode of Money Moves JA. I'm Kalila Reynolds. Till next time.